What's up, guys? Caleb here with Investing for Millions, and today is all about, is dividend investing right for you? And a quick little plug here before we get started. I have tagged my Twitter down below. It's at CalebGregory304. Basically, that is all about investing and making money. So if you're interested in making money, follow along. A lot of good ideas, not just from me, but the people I follow that I retweet, and we have good conversations back and forth, good stock talk and stuff like that. So if you're interested in that, please give us a follow. I just started at January 1st, and as of January 14th, we have 145 followers, so it's growing quickly. So hope to see you there, guys, and let's get started. What is dividend investing? So this is a basic course, and then we'll get into a little bit more in depth as we go through it. But this is just going to be a brief overview. Dividend investing is an investment approach of purchasing stocks that issue dividends in an effort to generate a steady stream of passive income. And now the next question is, what is a dividend? Dividends are payments that companies pay stockholders for holding the stock. Payments are generally issued on a quarterly or monthly basis. Guys, to make it simple, you buy 5 shares of a stock. If you hold that stock on the payment date, that stock will pay you 25 cents a share. So you will get $1.25 credited to your investing account in cash for you, free to do what you want with it. To make it simple, there are other options that we'll go through here in a bit. But in a nutshell, dividend investing is buying companies that are going to pay you dividends, either quarterly or monthly, that create a passive stream of income. Is dividend investing right for you? That really depends. Are you looking to earn a source of passive income? Basically, what that means is you want to earn some money while doing nothing. A lot of us want that. This is a good way. It takes time to build up, but this way works, and it's proven to work. Do you want your money to go to work for you to earn you more money? So just as I used in the previous example, you buy a stock that's worth $100, it pays you 25 cents per share. That's not a very good dividend yield, but it's an example. Actually, let's change that. They pay you $1 a share. That's a 1% dividend yield. So you are going to earn $1 for every share of that company that you own. So you park that company, you get the dividend money, not to mention any stock appreciation that you get. Are you interested in building wealth by investing? Are you a consistent person who can see things through? Basically, what those mean is this isn't a get-rich-quick overnight scheme. It takes consistent reinvestment of your dividends. It takes consistent adding to your portfolio from your income. But honestly, guys, once you get started, you get excited to add that money in there and watch your account grow day by day, week by week. You get a dividend payment, even if it's $1. It's so exciting and exhilarating. You grow to love it. You grow to look forward to those payments. It's truly something special. So I hope that if you get started, you will be able to enjoy that and understand that, and you will get a rush out of buying stocks instead of buying shoes you don't need. So there you go. How do I get started dividend investing? I get this question a lot, and basically it's pretty simple. So create an account with a free broker like Robinhood. Robinhood charges you no money to buy, sell, or receive dividends. You can buy stocks, sell stocks for free, add money for free. It's all free. There are upgrades that you can choose to do, but you can do everything you need to do for free. The next step, once you've created that account, and oh, by the way, guys, I am an affiliate with Robinhood, so I will link a link in the description of this video. If you're not a member of Robinhood, sign up through my link, and we will each get a free share. It's a good way to get your investing account started. That share could be up to a couple $100, so but more commonly it's a cheaper share, but it could be. I had a friend who got Microsoft once. That's, you know, $150 share. That was free. So sign up with that link. We both get a free stock. Moving on. Next, link your banking information. So link your online banking account so that you can freely move money to and from your Robinhood. The goal is we're only moving money to your Robinhood, to your investing account, because we're growing it and we're adding to our passive income, all right? Fund that account with an initial amount of money. That way you are able to get started. It doesn't matter if that's $50, $500, $5,000. The more the better, but just getting started is so key. And then the next step is you just got to buy good dividend stocks, and we will go through that a little more in a bit. So how do I decide what stocks to buy? So up to this point, you're probably with me. You're like, okay, I get it. I get what dividend investing is. Okay, I get it. I understand what a dividend is. Okay, I get it. It's easy enough to set up an account, but now it's like, okay, now you're losing me. How do I decide what stocks to buy? So basically, guys, I'm going to keep it really simple for now, because as you go through this and you learn more and more about investing, you'll learn to look at things from a little more technical standpoint. But to keep things simple, you can do pretty good with this theory. Buy stocks with a good history of price appreciation and dividend increases. So basically that means year after year, this stock goes up and they increase their dividend they're paying you. And it doesn't have to be overly complicated. These are often well-known stocks of companies you use daily, like Starbucks, Visa, McDonald's, or Disney. That's just a handful of them, guys. The list goes on and on. It could be your bank, it could be Bank of America, it could be your credit card, which, MasterCard. It could be the store you shop at, Walmart, Target. They all pay dividends. They all have had good stock performance over the years. And they have a steady increase of value of the stock and a steady increase of the dividend that they are paying you. So that's a good thing. When you get a raise, that's a good thing. Every time they raise the dividend, it's like you're getting a raise in your passive income. You cannot beat that. So what does this look like? Let me show you. We'll take a look at a few charts so you can see what I'm talking about. This is Starbucks chart since the beginning of 2017. As you can see, Starbucks has gone from down here, probably in the 40s per share, all the way up to 84. So in 3 years, the stock price has essentially doubled. So if you put $1,000 into Starbucks, you've now got about $2,000 in value, plus the amount of dividends that they've paid you. And that dividend has been increased each of these years. So they're now paying you more to hold the stock. So all in all, it's a win-win. And you start to see that compounding effect take place, because when you've now only put $1,000 in there, but your holdings are worth $2,000 and your dividend goes up every year, and you start to see how this can make you some serious money, right? So let's take a look at another one. Visa. Almost all of us have a Visa card. Visa has, basically tripled since 2016. It's gone from probably around $50 or $60 a share down here to up to $188 a share as of this chart, January 7th, a week ago from when I'm filming this. Once again, Visa has tripled your holdings. If you put $1,000, you've got approximately $3,000 in Visa stock now, not to mention the dividends they paid you for the last 4 years, and they have increased what they're paying you each year. So if they're paying you 30 cents a share, then it goes to 40, then it goes to 50, and it goes to 60. You see how that begins to add up, and as you increasingly add money to your account, you get more and more stocks, more and more dividends, and it starts to really snowball. So you can see how these good, solid companies make you money. What to look for when buying stocks. I threw in a little Bitcoin emblem here just because it's called constant price appreciation, like that of which we just looked at. Bitcoin has went nuts the last 10 years. This is neither here nor there, but I thought the icon here was fitting. But you look for constant price appreciation in the share price like we just looked at. Look for constant dividend increases to make sure that they are continuously upping their payout. Make sure the company has enough money to cover dividend expenses, and with a little Google search you can find this out. What's their payout ratio? That's what you need to search. Make sure that it is at least below 80%, that they still are leaving 20% to cover everything. This isn't overly technical, but it's a great way for beginners to get started while they are learning. So, like I said, there are more technical things to look at, timing of buying a stock, buying on the dip, understanding when a stock is overvalued, but for the most part, when you're getting started and sticking to these name brand stocks, you're probably going to do okay. Now, with that being said, we'll talk about some traps and things to watch out for in a second. But what do I do with my dividend money? So you got basically three options. You can take it in cash and then reinvest it. So basically, if you're getting a $4 dividend payment, if you're getting a $40 dividend payment, they will pay it to you in cash. Your account will be credited with that amount of money, and then it's yours to do what you want with it. You can have it automatically reinvested into the company that paid it, which is a drip plan, and that just puts it on autopilot. If Starbucks pays you $5, they're just going to buy you $5 worth of Starbucks shares, and in a partial share, which Robinhood is rolling out soon. Or you can get that cash and cash it out. That's the least of my recommendations if you're looking to add to your passive income and grow wealth. I like to take it in cash and reinvest it because I feel I can deploy it where I feel it is best necessary at that time, as opposed to putting it back into the company that paid it. Sometimes I do that, but I like to have that option. So one of the things I want to talk about was dividend yield. Dividend yield is the percentage that a stock pays you on a yearly basis. We've kind of been through this. For instance, if a stock is $100 a share and has a 3% dividend yield, the stock will pay you $3 per year for each share you own. These payments typically come once a quarter or once a month, just depends on the company. Ideally, you will look for stocks that fall somewhere between 1% and 5% yield. Watch out for dividend yield traps. All right, guys, so what I mean by that is you may be looking through your local Yahoo Finance page and see that a company has a 20% dividend yield. Be aware of that because likely that means the stock price is way down on that company. They're probably having cash issues. They may not even be able to make the next dividend payment. Those are things you need to look into. So anytime you see a yield that's above 5%, it doesn't always mean it's bad. But do some digging before you make that purchase because, oftentimes that signals danger. So don't just buy a stock because it has a high yield because ultimately you're likely going to end up losing money on that stock, and that's what we're trying to avoid. We want to gain money, not lose money. So that is that. And here's just a couple things to remember. Add to your account on a routine basis, whether that be daily, weekly, or monthly. Consistency is key. It takes time to build wealth and grow your portfolio, but with good habits, this adds up. Do not be tempted to trade. Trading is possible, and there are people out there who could do it, just not many. And I've seen it time and time again. Somebody starts slow, they add $100, $200 a week, and then they have $4,000 or $5,000, and they get to thinking, man, I'd really like to double that money today. They try to trade, and they lose half of it. So don't go there. Stay the course. Stay consistent. And then the day where you're racking up money on a beach while your dividends pay you is a reality if you put enough time and money into that. Stay positive and keep investing. Stay upbeat. Try not to focus on what your account is doing on the day-to-day too often, but more on the week to or the month-to-month and the year-to-year. Make sure you're trending in the right direction. If your account is losing money and the market is gaining consistently, seek someone out, comment to me, find someone who knows what they're talking about, and just get your ship righted. Other than that, guys, this is a real basic overview of dividend and investing. I hope that it's helped. Once again, if you like this video, please subscribe down below, like the video. Follow me on Twitter, Caleb Gregory 304. I'm there often. We tweet often. A lot of good stock talk. I'll be happy to answer any of your questions there. And once again, guys, thank you so much for watching this video. I hope that it's helped. Hit me up with any questions and get started. That is the most important thing. Get started, build an account, and you will be successful. Don't let anyone stop you. Thanks, guys.